I see a lot of out-of-town investors that are either starting or adding to a smaller portfolio. We do have, some bigger, 10 plus unit spaces, but these come up very rarely. And quite frankly, recently, the numbers don't make sense for a lot of investors on them. So it is kind of leveled out, as we can see now, in more of a balanced market. Near where those interest rates were going up, you saw a lot of investors that flipped homes there, and they were all put on the market as the interest rate went up as well. And then people are like, we don't want to buy these anymore, or not for what you want, right? So I do believe, even not my own clients, but people were losing money that were flipping in this area, kind of at that turn of interest rates going to 3-4%, because they just didn't make what they put into the home.
Hi, welcome back to the Canadian Real Estate Channel. My name is Luis Rivas. I'm a real estate investor and coach. I work out of the Ottawa region, and today we have Sarah Arseneault. Sarah, welcome back to the channel. Our Sarnia expert, boots on the ground realtor. What's new and exciting?
Well, thanks for having me again. So I'm a realtor in the Sarnia and Lambton area. What's new? I would love some more inventory of multifamily homes for my investors. Things are moving, and I can't wait to kind of show you some statistics after the channel's coming back from kind of their summer break. So excited for all you followers to see what's new in Sarnia.
Sweet. Let's get into it. Let's do it.
Awesome. So for all those that are new to the channel, I just like to go over that even though I serve like the whole Lambton County area, I do just put a lot of the stats from Sarnia specifically, as that is the biggest community and usually the most invested in. It sits at about, 80,000 people versus the smaller communities around. So for the purpose of this presentation, we are looking specifically at Sarnia. And for this presentation, I guess we're focusing on June. So the median price for the year in June sat at $490,000. So compared to some other areas, or like up where you are, Ottawa, I'm sure that's sitting pretty good.
Yep.
It has came down since a year ago, where it was up closer to 550. So we are seeing still a slowdown with the interest rate, ticking up higher. We are selling homes faster. So a few months ago, for any followers, the average was about, I would say in February, I believe it was around 30 days. So we are down to 15 days, which is quicker than last month, which was sitting at about 18. So things are selling faster, and we are running into multiple offers I'm seeing in the Sarnia area again, as long as the home is priced under $500,000.
I see. Okay.
So there is still definitely, the first-time buyers, the investors, people are looking for homes. The ones that tend to sit longer, though, are over that $500,000 mark, which I guess makes sense given what the interest rates are and where that puts people in order to buy a home.
Got it.
So in June, most homes sold for 99% of their asking price, which is basically the trend all year. So as long as a home is priced correctly, it is still going to sell. Buyers just have more options, so it's taking longer than the previous year.
Sounds normal.
It is, and I guess we're back to that balanced market. So just to give everyone just a look at the residential market, this will also include multifamily homes, but new listings in June, so 2023 June, we're back up. A little bit less than last year, actually. So this is a slight change compared to the last few months. And this is where I'm saying we need more listings for my investor clients. We are seeing, even though things are selling, and maybe that's why it's 15 days versus 30, the inventory is starting to come down again. So people with the increased rates, I believe, are just kind of sitting on their homes and only moving if they have to, or if, something pops up that they're really looking for. So the pickiness is still there in the market.
And you mentioned that the inventory is drying up a bit. Who do you see is investing in this, like with the proximity of the border? Who do you see is the avatar, the typical investor?
Yeah.
Investor for Sarnia.
Yeah. So it's been similar since COVID, but it's really the out-of-town investors and usually those starting out. So I work with a lot of investors that maybe this is their first or their second property, or maybe they have properties in bigger cities, but they're just priced out. So our rents are quite typical and quite high for the size and the pricing of the area. So often it's easier, if a duplex or a triplex is under 500,000, it's easier to get your first property, right? Or it's easier to buy more. And with the rents being high, the numbers often make a little more sense than going into a bigger market. So I see a lot of out-of-town investors that are either starting or adding to a smaller portfolio. We do have, some bigger, 10 plus unit spaces, but these come up very rarely. And quite frankly, recently, the numbers don't make sense for a lot of investors on them, where, people are like, I'll sell it if you give me X amount of money, it's like, I'm going to hold it unless you want to pay me. Exactly. So for someone that's trying to make, a CMHC loan work, or, any bank really at the interest rates are at, it doesn't make sense often, the ones I'm seeing available. So if I had lots, I'd be selling them, but the numbers just aren't making sense for the investors that are looking.
I understand. It's a common trend in the rest of the province.
Yeah, I feel like people that want to sell, and I'm seeing it as well, like there are duplexes and triplexes, those starter multifamilies on there, and they're nice, but, the rents don't make sense with what they're asking for the place. And often the current owner just doesn't want to sell if it doesn't make sense. So it's kind of that balancing act still, where people don't need to sell, but I do believe, and I have been seeing more and more as, those renewal time comes for the previous owners, they're starting to think, well, I need to sell now, or it makes more sense when my numbers don't work anymore.
Gotcha.
Now, sales activity. So even though our inventory is down, I think this is pretty typical. You would want to see this where inventory is down, but sales are up compared to last year. So this makes sense for how quick the homes are selling compared to a few months ago. It is really forcing it. And if we had more inventory, I don't believe, even though it's a summer market, we would have seen those days on market come back down. It's really drove around here anyways to a lack of inventory that's causing people, especially in that under 500 category, to kind of jump on whatever is available at this time.
Yeah, and that's being driven by the high interest rates, right? For people to look below the 450. And I see that the number of sales is back to the pre-COVID levels, which is normal. It's good.
Yeah, it's normal, it's good. It's kind of that more balanced market. But even, like through that COVID, yeah, it's similar levels really, even during that COVID time. So although we have way less inventory, we have more inventory than during COVID, which has really just driven this more balanced market where, inspections or conditions, or depending what you need in a home, sale of home maybe even, are still something that we can do and are available, which is good for people that are looking, or maybe even the newer investors that don't feel comfortable, looking at everything themselves.
Got it. Will you be talking about like multiple offers later on?
Yeah, we can. In terms of, let me get to a different slide and we'll talk more about that. Just quickly, we're almost there anyways. This is just a quick snapshot. But the months of inventory, as you can see, like months of inventory has stayed pretty steady for June. Whereas, we had those COVID where it's, under a month of inventory, where last year and this year we sat at about 2 months of inventory. So I think really showing the balance is coming back there, maybe, nicer around 3 in terms of balance, but it is better than we have seen it.
Cool.
Okay, this is where I usually like to kind of dive in more and kind of explain the area and the multiple offers, and even kind of what we're seeing in terms of, if you own in this area, how has it fared with the change since last year with the interest rates? As in multiple offers, where you'd be seeing multiple offers more so, I'm going to say, is or where I've seen it even in the last few weeks is, let's say, the north end. For all you new followers here, this is a snapshot of Sarnia, and I've broken it down into the main areas. I've left Point Edward out. It is considered, I guess, not Sarnia, but it's just more of a community where you would live as a single family home. There are some rentals, but it is a more expensive area because it's near the water and the Blue Water Bridge to the USA. It's just less invested. It's not somewhere I take investors a lot. Doesn't mean it's not investable, but just leaving it off of looking at that as a main.
Got it.
The north end is also, there is definitely investable homes in that area. Specifically, people were doing a lot of flipping in that area because that's a sought after area, especially for single family homes. But it is more expensive as well. So this was an area that specifically during COVID as well, there was less and less people, unless you were flipping homes, that you were buying here in this area. But if you did find a duplex or triplex or something bigger, that would be an ideal area to hold it, because it's, those A+ communities with great school and great rents. So great area, just things don't come up very often. But this is also the area that we have been seeing the multiple offers, because during COVID and, those times of low interest rates, we were not seeing homes under 500,000 in that area. So now if we're finding starter homes or these smaller homes that are under 500, people and first-time buyers are like, I want that area, so I'm willing to take that home, even if it needs a bit more work than something in South or Central. So this is the area where we are seeing a lot more multiple offers, specifically on single family homes, just because if it's in that price point people can afford, they want to live there.
Yeah, these numbers are pretty good, considering that interest rates have increased so much in the last 12, 16, 18 months. And the whole pandemic kind of like created like an anomaly. I think in just looking at your like the south end and the north end, like prices have kind of not changed too much.
No, and that's kind of the anomaly that we're seeing, and it's driven really by a lack of housing. Specifically, just because I've priced one, it wasn't specifically in Sarnia, but a neighboring community. And I knew this house last year, priced it for them last year to sale, priced it this year. And, that's when it was from 1.5% to now, close to 7%. And I said, okay, it's probably around 550 you could get last year. This year it's around 500. So even still, like, $50,000 is not, equivalent to the change in interest rate.
No, it's not a game changer. You're right.
No, so we have not seen that huge, and it's because we haven't seen, an influx of inventory. Now, what has taken the greatest hit, and it's the new builds, like where people, specifically where the builders in the same smaller community outside Sarnia, we saw these homes where the builders just, everyone wanted a new home, and they were getting to the point where the used homes, because they were so in multiple offers, were actually just as expensive as a new home, but people didn't want to wait. So what was happening? So let's say a 2-story new build, that might have started around, 600 was up to 800,000 to build. And now with the, the interest rates, the builders sitting on it, that same, $800,000 home is back to 600,000 now to build. So where we're seeing, and that was the same for the semi-detached homes, they went up to almost 700 and now they're back down to 550.
Got it.
So the demand is not there for a lot of them. Specifically, the banks are getting tighter on the building. I ran into a situation with a client as well where, you know, he got to the end, his home took X amount of time, the bank agreed to loan him the money, and then they wanted a reappraisal because the new houses that they were selling was worth, you know, $150,000 to $200,000 cheaper than what the bank agreed his home was worth 6 months ago.
Ouch.
So we're running into those, right? Now they are getting lucky, or in his case, there was another lender that had already agreed as well to, you know, finance it, and they didn't ask questions. But specifically the new builds, we are seeing, you know, issues like that. So I get the fear of people where they're like, okay, if I sign for this now, you better make sure your lender is going to guarantee it when it's going to be built in 6 months as well.
Yeah, especially with the A lenders, eh? The people that have the success have to go to a B lender, and that might be the only option. Like, I mean, it's not the only option. You could cough up more money, I suppose,
Yeah,
to make the difference. But if you're a first-time home buyer, you're already pretty tight on a budgetary
correct.
standpoint.
And the used homes, I mean, that's easier to, you know, if it was a long close to not have an issue with. It's these new builds that, you know, it's like, well, that's the same home, you know, like that's right next door.
Yeah.
And now it's only this much money, you know, like in terms of to build. So, and yeah, and in that case, they were lucky and didn't need another appraisal by the second lender. But I'm not sure how it would have went, because it is true. It's, you know, $200,000 cheaper than it was 6 months ago in some cases. So, I mean, that's what I'm seeing more so. And it comes down to why conditions are more popular as well. It's like, what is the appraiser going to appraise it at?
Appraisers are nervous. They're really tightening. Like, I mean, they're being driven by the banks, I suppose, but like I'm hearing that appraisers are just being very, 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 very conservative.
And so are banks, yeah, A and B lenders, right? And the private lenders too. I had another client that it's like, oh hey, actually we want the money back and we are not gonna refinance you. You know, like this is where it's at. Even though at that time it was a 10% loan, you know, a few years ago. It's like,
And now
nope,
they're wanting 15 plus,
or just get your money back. We don't want this risk. You know, you didn't pay enough principal in X amount of time, right? Like they're not taking that, oh yeah, we'll just coast and get interest from you. It's like, we want our money and we want it in our pockets.
yesterday.
Yes, yesterday, or sell it or it's mine. So definitely seeing that. So investors are being more conservative, even in the Sarnia area. I get it, especially during COVID. I saw a lot of investors that maybe didn't work with a specialized realtor and were just buying wholesale or, you know, any deal they thought was good and didn't know the market. So the biggest thing is know the market, do your research, and really work with someone that knows the area to make sure your numbers work, because those are the same investors that are running into troubles now because they thought it automatically would be worth more or didn't have, you know, an exit plan really, or a plan B or C.
That's so key, right? Like having an exit is like a must, but having like a plan B, plan C exit is like it's required in this economy, in this environment.
Yeah, and I really think people didn't think the other economy, you know, we were going through would ever end. So I'm just seeing a lot more conservation really of money, of time. And yeah, like investing takes a lot of hard work, as you know. Like, you know, you want to make sure the profit margin is there, because like anything, there is risk to it as well. Like we can't just grab hoping, you know, on your shoestring that it's going to work in the end.
Yeah, that's not investing, that's speculating, and it's dangerous.
It's gambling. Yeah, that's for
Gambling.
sure. Yeah. Yeah.
Better word.
Yeah. And I know, like we talked about the North End, so I won't go into that too much. Like, I mean, you see it went down 7%. Quite honestly, even though it went down 7%, it could also just be like more of the higher priced homes are sitting, you know, so lower price homes were selling. So even that, like, I just think, did it go down? Probably not that much, you know, like, and even 7% isn't a lot considering the interest rates, you know, like
you're echoing what a lot of the other realtors are saying, that the interest rates are not driving the prices as much as the lack of inventory is.
Correct. And I mean, like, if we looked at that number from like 2 years ago, yes, it's went down, like they've came down, since multiple offers, but we are seeing like it just hold, like it's holding. Now the central area, this is where your malls, your grocery stores, everything really is. Lots of investable areas in that area in terms of duplex, triplex, townhouses. Townhouses were at a point where it didn't seem investable in terms of the numbers, but they are coming down to a point where it might be worth it depending on your interest rates and capitals. As most of the townhouses, condos are either freehold or they're quite large and have a very low condo fee, and that might include windows, doors, like it might include some of those things, which makes sense. So that's worth looking into again now as well. If that's someone's strategy, especially for someone that might be an out-of-town investor that doesn't want to deal with a roof, or, they don't want to deal with those added expenses if something does happen. I see, it looks like it went down 33%, but as mentioned, in that area, there's A+ neighborhoods in that area, newer homes, older homes. So I would not say that is always relevant, but I definitely would agree that it's definitely went down the most considerable, just because people were willing to pay whatever it took in multiple offers to get into that area versus having to live maybe on the south end.
Okay.
So people were, paying probably a lot more than a home is worth. So I definitely see those numbers being of some accuracy. Now, Sherwood, even though it looks like the south end, and that's the biggest misconception, they're like, oh, it's all the south end. But people really love to live in Sherwood because it's close to Lambton College, which is a large, like, international community as well. So a lot of these homes in Sherwood or Cardiff area are either rentals or student rentals or people just starting out. So this is a good, safe area. People really like to live there. It's walking to distance in some cases to the college or on a lot of bus routes. You'll also find a lot of townhouses or semis in this area. So again, the numbers have not really changed a lot considering the interest rate change. So good area to be in, good area to invest in. You just won't find a lot of like duplexes or triplexes, just because this is a newer area versus a lot of the duplexes and triplexes are in the older areas of town, like the south end or central.
And is there is there an area of Sarnia that has like multis of the 10plex and up, or is that just not very common in your neck of the woods?
It's not as common, or the big companies already own them, right? So there definitely are some. If you are finding them, they're probably 10 to 15s, and they'll be in the south end or central is the main area you'll find them. And when I say central, I mean follow, the latitude of the south end over and up. So it's kind of in that same corridor where that's where they are. They're usually 1 to 2 bedroom units, so kind of ideal in terms of renting. You just really need to find them where, a big giant has not already scooped it up. Where someone kind of individually owns it, or they've owned it for a very long time, right? Those old investors that used to invest, and there was definitely less players in the rental game 10 years ago. So it's something where if you search, you might find it, but they're not coming up very often.
Got it.
The south end was a really big area during COVID. People really liked this area. Numbers were going insane, like, closer to 500,000, which was unheard of because a lot of gentrification coming in, flipping the neighborhood, people from out of town, so many flips. It was a great thing to see. And first-time home buyers were also kind of forced to live here just due to pricing, right? It is closest to the industrialization, though, like kind of sector. So people, 20 years ago, if you didn't have to live here, they didn't want to. That being said, is it unsafe? Probably not. It is still, compared to Toronto or Ottawa, very safe there. It was just kind of an older end of town, and somewhere that when it was built more cheaply, let's say, than the north end.
Got it.
But as you can see, we were seeing, even 6 months ago, there was a massive drop in numbers there. in terms of people are like, oh, wait, I can afford Central. I can afford other areas. I'm not fighting to live in the South End anymore. So it is kind of leveled out, as we can see now, and more of a balanced market. Near where those interest rates were going up, you saw a lot of investors that flipped homes there, and they were all put on the market as the interest rate went up as well. And then people are like, we don't want to buy these anymore, or not for what you want, right? Like, so I do believe, even though, even not my own clients, but people were losing money that were flipping in this area, kind of at that turn of interest rates going to 3-4%, because they just didn't make what they put into the home. So
Really
that's
scary.
quieted down. Yeah, it's quieted down because people have realized, like, we can't just flip homes and expect to make big money there at this time.
Yeah, the flipping and the burring game is not what it was 2 years ago. It's not juicy.
No, it's not. And if banks will even give you the money to, like, to even start, but it is a risk at this time. And that's why I think people are looking more for those multis, move-in ready, but it's also making them a lot more tight in terms of even figuring out where the money comes from or where you can improve it to make more money. But yeah, that's kind of the South End there. And overall, I think June was a really good month in terms of sales. They weren't fast sales. There wasn't a lot of them, but in terms of showing the market does hold well, which is great to see as an investor. The market has not had a huge dip because of the interest rates.
Cool. Very good.
Now, moving forward, I don't think I got much left. I do hope to see, I do have a few I'm looking at this week, so hopefully I will have some more duplexes and triplexes to share with investors. For anyone watching, She Will Sell It is my handle. You can look there on Instagram, and I will post anything new. But people are still wanting to liquidate and sell, so hopefully the inventory does make a tick in the right direction.
So Instagram is the best way to get a hold of you, Sarah?
Yeah, that's probably the easiest. You can send me a direct message for any investors that have a question. And then if you don't have questions and just kind of want to follow along and see what's going on in terms of sales and things like that, you can follow that as well.
Well, I hope you have a great rest of your summer. You mentioned at the beginning of the call here that you said the word summer market. Do you feel like that still exists, or is it just basically just kind of coast along and there's really no slowdown or uptick?
No, and even in Sarnia in the last, I'm going to say 5 years, I haven't really, honestly, the summer market almost goes like people are wanting to enjoy themselves. And usually my busiest months, in terms of every year is like September, October, where people are like, it's over, kids are back in school, I am ready to go. And then really, even in the past 4 years, it kind of went right solid, even into the winter with maybe, that Christmas slowdown. But other than that, no. Spring might tick up a bit, but even still, we have not seen that in Sarnia in terms of it's just kind of busy all year. But, that summer, even a lot of the spring, almost people are like, I'm just going to enjoy myself. So best months to look, maybe the summer, as long as the deals are there, and December. But the deals are, I would say, always there in terms of, how some people are like, I'm going to wait till this month because it's the best month to sell. Like that, it doesn't exist anymore. Because if people did that, like in November, I'm going to wait till spring. Well, the interest rate was also, 3% higher by that time. So there's really no guarantee anymore.
No, and again, I think it's because of drawing up inventory. That would make sense. People have more of an urgency to get in before things spike again or interest rates spike again, and luckily it keeps you busy.
That's right. And I mean, I don't always complain when it's a little slower when it's nice weather, right? You gotta enjoy it while it's there.
I hope you enjoy the rest of the summer. I hope you and the kids have some time, and I hope that you get to come back and give us another market update very soon.
Yeah, we'll see what it's like come August and the fall market.
I can't wait to hear it, and I want to thank you again for coming by.
Yeah. Thanks for having me.
Yeah, thanks for coming by. We really appreciate you and your update and your market outlook, and we hope that our listeners and our viewers reach out to you if they have any questions, or if they want to like get into the Sarnia market. You'll be able to help them out. And just having said that, I'd like to thank you again. And my name is Luis. I'm a real estate investor and coach. And Sarah is a realtor in Sarnia. We'll see you on the next video, and have a great time. Take care.